All right, good evening, everyone. Hey, welcome to this week's session over here. So, as usual, we'll run the updates on the market and highlight some of the opportunities available. Okay, and we had a decent trade, hitting our targets on dollar Canadian as well. Overall, the month has been, in terms of like performance, has been pretty stagnant. So it's always great to have one or two kind of like targets being hit. So pretty great on that. Congrats to those of you who also managed to ride on the wave on dollar Canadian. Um, Moving forward this week, right? Obviously, we'll go into the details of it as we run through the charts here. But I'm looking at some of the yen pairs, maybe building up some setups that we can take within the week itself, right? So just some quick observation from last month as well as this month. Seems like most of the trade activity for us did come closer towards the end of the month. In September, I still remember we had like a couple of nice consecutive wins going into the end of the month as well. And so happened, of course, we won't know whether yen pairs are going to work out or not. But at least for dollar Canadian, it happens, again, close towards the end of the month as well, right? So yeah, I would just jump into dollar CAD first and really talk a little bit about this here, as part of a trade review, and then we'll look at the markets in general, and then we'll look at the yen for trade setups, right? So dollar Canadian, for those of you who also joined us last week, I kind of mentioned that we are expecting that pullback, right? And short term wise, we can actually look into the retracement trade. And so far, the market has been pulling back, but obviously not very impulsive in nature. Obviously, if it's a little bit more impulsive, it'll be better. But again, these are signs of the pullback being corrective. It means that eventually, after the pullback, there's still that high probability market will continue to the upside. And of course, there's still room in which the market can still pull back towards, right? As part of a Fibonacci guidance, we are expecting price to pull back towards the 50% FIB, which is at 1.3900, right? And we managed to capitalize, not a huge move, but something here, in terms of risk to reward ratio, is great. It's 1:2 for the first target. For those of you who are still holding on to this, maybe as a partial or as part of the extended target move, right? Aiming for here, you would definitely want to start trading your profits or even bare minimum shift stops to break even, right? So this was the trade setup. Just for those of you who are who maybe might have missed this, right? It was a pretty straightforward kind of trade where we don't really experience much of a drawdown. But it was a little bit on the tricky side because we did carry this trade over the weekend. But before the weekend, there's already the opportunity for us to shift stops to break even and kind of a risk free, right? So psychologically, this trade was fairly straightforward and easy, right? So you can see this is actually the conditions of this trade is kind of like checking every, I would say, taking every part of a checklist, right? We have the higher time frame context of trading this as a retracement trade. We understand that. We saw that this has potentially completed a 5-wave structure as well. So it was there. And then in terms of the setup itself, we have some sort of a big break here, right? Which is what we call a liquidity sweep. The market made a low, right? A lower low. So that's a break of structure over here. And of course, it carries momentum with it as well when it's breaking. So when it's pulling back, we have the other block here as a confluence towards the Fibonacci. And then, of course, the inner part of liquidity is there as well. So basically everything was checked, right? So it's kind of what we call a perfect setup. But bear in mind, of course, perfect setup conditions doesn't necessarily mean that the trade is going to work out 100%, okay? It's just that if the conditions check itself perfectly, it's a trade that we'll want to take, right? Understanding that it's not going to work out 100% all the time, it's still a trade that we definitely want to have be part of, right? And So happened this trade actually woke up perfectly, right? Now for me, I'm still holding part of this trade with the extended target on a high time frame towards 1.39. Obviously, I've locked in some of this position with the profits here. Okay, 1:2 risk to reward. If we're gonna target 1.39, actually that extend the risk reward to 4.3. Of course, if you minus off a little bit of your swap fee and things like that, probably 1:4, which I wouldn't complain about as well, right? The only thing here is probably it's gonna take a little bit while for the move, right? We are getting closer towards the Fed funds rate FOMC this Thursday midnight, so probably dollar move here. It's gonna be slightly slower, as traders are waiting for that, that data and news to come out, and then we'll see more volatility from it. Okay, so yep, that's a quick one on dollar Canadian. Let's move to the overall market over here and kind of highlight some of the opportunities as well. Okay, so Euro dollar, okay, Euro dollar here, we are anticipating the push to the upside. Okay, it has started to climb a little bit, but again, this is very, very corrective in nature. Which again, whenever I see a reaction from a key level being very, very corrective, I'm a little bit concerned, right? Which means probably price will not be so straightforward and just keep going higher. There is that possibility this will probably come back down first. Okay, pick out this low and then when you start moving higher. So that's something you want to take note when you see a corrective reaction of a key level. It's not so straightforward and clear cut. Okay, so I'm just a little bit careful on this. But anyway, because it's a corrective pull reaction over here, will not probably gonna have any setup to go long as of now anyway. Okay, but in terms of the overall directional focus here, we are still anticipating this wave to complete itself. So we'll see, right? We'll see how market develops, and then do we get some sort of a buy opportunity. Okay, then we have the pound dollar. So pound dollar, the reaction is a little bit different compared to the euro. So this one here you can see is really not a reaction per se. The market is just basically stagnating around the key level, right? So I would continue to just be patient on something like that, okay? Because we are at a key level, but we don't see some obvious reaction out of it. There is the good possibility that perhaps this would still break that low and form perhaps a bigger structure as a diagonal, right? So then that would be as a 1, 2, 3, 4, 5. And then obviously then it means this part here will probably look for that reversal, right? So instead of like this being a 3 wave and then this complete here, it will evolve to potentially a 1, 2, 3, 4, 5, and then 1, 2, 3, and then the next move out, right? So we'll see, right? Again, we need to be adaptive to what the market is evolving into, and obviously from there, then we take reference point from it, right? So we'll see how things gonna develop from here. There is no sell setup as of now at the moment, right? But if this actually comes out impulsively, it might open up a short-term sell possibility, but I'm just gonna be careful and cautious on that because if this comes out impulsively, likely means that it's gonna take out this low, which in other words, it means that this structure may have also completed, and this would then just form a V shape, or then this forms a crawl here. Okay, so I think there might be something, but whether is it going to be worth looking at it, that's another thing. Okay, so that's the update on the pound. Then we have the Aussie dollar, which is currently testing the 618, which is where our key level is. If we can get some sort of a decent reaction of this level, then obviously we're looking at the downside, right? Now, what I mean by decent reaction is we can obviously observe it from a 4-hour point of view where we get an impulsive leg, or alternatively, if we go down to the lower time frame, okay, we want to see at least at the lower time frame some sort of a impulse, short-term 1-hour impulse leg, right? We have some of our criteria setting up, right? You can see that this is a little bit of a crawl. This is liquidity sweep. This is a swing low point. If the market comes down impulsively, taking this out, that's going to form your breakup structure. If this is coming down impulsively, naturally, it's likely going to leave behind some value gap. If you can do a pullback, then that becomes a setup to sell it, right? A little bit of forecasting, but I think it's quite clear as of what can potentially set up over here in the Aussie, right? We probably just need to give it a couple of days. Maybe with the FOMC statement, post FOMC, we're going to get a setup maybe into Friday. Okay, so that's what we're going to look out for. Dollar Canadian, we talked about it already. Then we have the dollar yen. Okay, which brings me into the yen pairs opportunity for this week. So dollar yen over here had a nice little reaction of this fib, right? Which I think last week we also covered, right? After a 3-wave move, we have a pullback. We expect another 3-wave move. And I recall I did share with you guys the extension of 618 as well. Okay. So this is something that potentially in the internal wave 1, 2, 3, right? Towards that 618. Now, one thing to be cautious, of course, is if you're gonna expect more upside, this pullback shouldn't be too impulsive. Okay, if this just keeps crashing like that, obviously you don't just blindly buy into it when it hits a key level, right? We still want to observe the setup and things like that. But bear in mind, this can still develop into a regular flat, right? So you need to be quite familiar with some of the potential Elliott wave patterns to do a little bit of scenario planning, okay? So this one here, in any way, short term, it opens up a sell trade opportunity. The context of this is trading the retracement, right? We are not anticipating a bearish trend. We're just looking at possibility of trading the retracement. Okay, so if you go down to the hourly, there are that setup that is building up already, right? We have the liquidity sweep, obviously, with all these highs, big breaking. We have this swing low here taken out as well with this tiny bit of an impulsive leg. The only condition that isn't ideal in this, okay, is the part where we don't have a liquidity sweep. Okay, sorry, we don't have a fair value gap, right, or an order block. Okay, so that's the part where I'm just a little bit cautious on. And that doesn't mean that we can't capitalize on the opportunity, right? We might, number one, have other clearer conditions fulfilled on other yen pairs, like pound yen or odd yen, right? Generally, the yen pairs are similar on that. Or we can say, all right, we don't need to have all the conditions take. It's still, the setup is still valid. Then you ask yourself, are you comfortable in taking something like this, right? So, that's the take on it, right? But to me, I'm not gonna put this setup in today. The reason, which is I think quite important, I want to share with you. Okay, it's a little bit of what we call expectation, right? Now, if we're gonna take this trade, what we want to understand is, ideally, we want price to pull back correctively towards our entry point, right? Because then that will build into an impulse correction leg, which increases the odds of market continue moving lower. Now, if the market were to come back up impulsively, then it reduces the odds of this trade working out. So just based on that understanding, right, based on what I would ideally want the market to do, I know that, I wouldn't say I know, right, but I would say that I wouldn't expect price to reach my entry tonight. Right? Why? Because based on some time expectation, if I'm going to have this as a corrective pullback, it needs time to pull back, and I don't expect it to do it by tonight, right? Because if it's going to hit my entry level by tonight, means this has to come out pretty fast, which is, again, then not ideal. Okay? So what I'm doing here is I'm using time expectation to filter off trade as well, right? We are not just using certain entry point to filter or certain indicators to filter, but we're kind of using time expectation, where we are expecting price to pull back correctively and therefore not going to be completing by tonight, and I don't need to rush and put in my entry, because if I'm going to put my entry tonight and it tags me in, it means it's an impulsive pullback. It's not ideal, right? So I'm using this technique here to also help me filter out, right? Because if tomorrow I come back in the morning and I see, oh, it's an impulsive pullback, then great. You know, I would probably not trade anyway. But if tomorrow morning I come back and the market is essentially still around this zone, then it proves itself to me that it's indeed doing a corrective structure. Then I have that time to put in my pending order maybe tomorrow morning. All right. So this is a little trick that you guys can also have like included in some of your trade setups and trade plan, right? Using time expectation as part of a filtering process. Okay. So that's going to be, of course, the same as the other yen pairs here. You can see some are clearer. Like a pound yen here is obviously clearer in terms of the entire setup and structure as compared to dollar yen, as compared to odd yen, right? So among this three, in terms of like directional bias and expectation on the higher time frame is the same. Okay, H4 here, we're looking at downside. We're looking at short-term pullback, potential sell trade. Okay. However, in terms of setup, I personally favor the pound yen a little bit more because of that clean impulsive leg, right? Odd yen has a little bit of impulsive leg, but you know, not as clean as the pound. Okay, so among the three, I'm actually in favor more of the pound yen. But again, you can see, right, where we are right now towards where entry point is likely going to be. There's still some distance away, and I don't expect the market to be pulling back and tagging out entry by tonight. Okay, so there's a lot of time that we can just chill right now and come back tomorrow morning to really observe if price is going to continue to pull back correctively from here. Okay, so just keep an eye on this on the yen pairs. You can have it in your watch list. Today is just Tuesday, right? So we have like 2 more days. Even if the market takes another 2 days to develop, it's perfectly fine, because then that would be proving itself it's a corrective pullback. Okay, so those are the yen pairs. Very, very similar in the overall structure. We're just basically expecting the pullback, right? Great. Then we have gold, okay? Which you either love it or you hate it, depending on how your positions were, right? But I'm not in any of the gold position, and I think we kind of talked about this as well last week, where I say after an impulsive leg, you know, oftentimes the market will pull back. You don't want to be getting involved at the very, very peak. Even right now, you can see it as a drop, right? You don't want to be selling at the bottom, or probably also don't want to be buying at the bottom, right? I mean, not right at this bottom, because we don't know if it's going to U-turn from here. Okay. So what we are looking here, of course, this is the expectation I'm looking at, right? We are expecting at least some sort of a 3-wave move, right? As part of a guidance in terms of expectation 1, 2, 3. So short term, we do expect some sort of a pullback. Now, will we be able to have the opportunity to trade the short-term pullback as a buy? Yes, but not now, because we don't have a setup in place, right? So to me, gold right now, or say even within the week itself, will probably just be sit and wait, right? There's no clear setup. There's no real clear direction as of now to be focusing on trades. Okay, but if we can start to see some different development, whereas we see some sort of a crawl, some mini impulsive push here, maybe on a lower time frame we can capitalize on this, and then maybe from there again another sell, right? So we can buy and sell depending on whether we get that setup there. Okay, so we'll need to see. Same thing here for silver. It's testing the key level, but doesn't mean you just want to jump in and buy, right? So same thing here. If you look at it from a wave structure, this seems to be a typical internal 5, right? So if that's going to be an internal 5 from Elliott wave perspective, that can just simply mean that this is just wave A of a pullback, right? And in a 3-wave expectation, it means that after this pullback here, we might still see one more drop. Okay, so that's how the expectation works. So again, we'll see. Pretty similar to gold. We want to see how price is going to react off this level first. Okay. Good. Then we have crude oil. So crude oil here is coming down. It's pulling back towards the key level. I don't see a sell. I would say I don't see a clear sell at this moment. The part here is we did break this with fair value gap, but this fair value gap, if you take fibs from this high to this low, it's below the 50% mark, right? Which is not something ideal that we want. But things can change. If this continue to come down impulsively, then only start to pull back, then yeah, this fair value gap would present itself near our confluence entry point, right? Then that's something that we can consider to do a short-term sell, and then maybe from there is gonna push back up after which, right? So this is the expectation. We expect this to pull back towards 59.45, 58.7 zone. Then we expect one more pushback up, right? So short term, whether we're gonna get that sell really depends on the lower time frame. If you're gonna get that impulsive lick a little bit more, then yes, right? So potential watch list, but we'll need to give it a little bit more time for more extra confirmation. Okay, so that's on crude oil. Then we have S&P, which successfully break that high. So again, we're just going to maintain a bullish bias. As I say, you know, I think the equities are going to end off the year bullish. There's so far no sign to point towards a bearish move in the equities market, right? So any corrective pullback would naturally open itself as an opportunity to go for upside. Okay, but obviously you don't want to buy at the top, right? Again, you want to wait for the pullback to get involved in it, right? So that's pretty straightforward. Okay, the yen pairs, we kind of talk about it already. Then we have the pound odd coming down pretty impulsively. So initial expectation was we're expecting the 618 here to have some sort of reaction. We did not really get that, so we kind of need to update a little bit in terms of our count. Let me just remove that as well. Okay, so I think this invalidation level would likely going to be broken, and we'll probably need to shift our viewpoint from here. Okay, so one thing to note also, right? We need to be very flexible, right? You don't want to be like married. That's the word or the term, married to your charts. Oftentimes, traders would not be very comfortable to, in a way, admit the analysis has changed, right? Because the market conditions has changed. But as traders, we need to be very, very comfortable in saying that, all right, our previous analysis is no longer valid. Let's update our view count, right? Because it's not really about whether our analysis are being right or wrong. It's more about evolving together with the markets, okay? And the idea is not about being right or wrong. I always say the important thing is, at the end of the day, do we make money out of the markets, right? I can be wrong more than I'm being right, but as long as I'm profitable, that's the end goal. Okay, that means my analysis can be wrong maybe 6 times out of 10. But for the trades that I'm taking, at the end of the day, if I'm making more than I'm losing, I'm net profitable. That's the end goal, right? That's the objective of it. The objective is not being right all the time. Okay, so that's something you need to be very, very comfortable with. Okay, so you know, when things change in the market, when the price is telling you something else, you just need to update itself, right? Like in this case here, pound odd, right? Initially we were expecting upside, but then the market is coming down. It's proving that likelihood of it continuing moving higher is not very, the probability is not very high anymore. What we do is we just update our view count. Okay, so my take here is that obviously you don't want to sell it, but the idea here is if it's gonna take out this low with momentum, right? We'll be looking at more downside after a corrective pullback. Okay, so this might flip itself into a bigger. I don't think this channel is gonna work out nicely like this, but yeah, I mean, in a way, if this breaks that low impulsively, we can expect more downside. Okay, but of course, doesn't mean that you want to just sell it after a range, because this can do a fake break and then bounce a V. Then we need to update our count again, right? So as of now, whenever we face situation like that, we're just going to be patient, because if it's not clear, we wait until the market shows signs that it's very, very clear, right? So GBP AUD, my suggestion, you just stay out of it for the week. Okay, come back next week and see how things have developed. Right. Let's move on to BTC here. Okay, BTC is currently in a range environment. Market is currently testing this high. So I will be giving it another 1 or 2 days and see how market is going to react off here. Okay, if this is going to be corrective in itself, there's a good possibility we'll take out this high and start moving up. Okay, but I'm also cautious the fact where this leg here can eventually turn this into something like that, right? Which means the market may take out this low before the push up. So we'll want to, the clue here is to see how the market is going to develop on this leg. Is it impulsive or is it corrective? Because if it's corrective, we can expect more upside. But if it's impulsive coming down, then you just need to be a little bit more cautious in the upside. Okay. So if you're looking at trading in the near term for Bitcoin, then you want to be a little bit patient and see how the market is going to react. But if you're more like longer term investing, then yeah, I did share we have this position here, which is a little bit on the upside. If this comes down more, that's another level that you can look to add in. If you're looking at long term, right, which means you're not having a hard stop, but you're also not leveraging, right, meaning you are looking at buying it in a cash position. Okay. Yeah, so those are the updates that I have for this week. Very, very quickly, let's see if you guys have any questions that you want to clarify or any particular instruments that you wish me to cover. Feel free to put it into the chat. All good? Oh, so if there's no questions, I hope today's session has covered some of this markets here for you guys to give you an idea what to look out for, right? And of course, for me here, definitely on the yen pairs that I want to look into. Okay, I see Calvin here putting in pound Canadian, so let's take a look at that. Good. Okay, so pound cat. And just remove some of this little drawing previously done. Right. This is a little bit on the zoom out view on pound Canadian, right? So we are seeing this more of a crawl. The overall expectation is if this crawl structure can break, it's really opening up the downside here, right? But of course, zooming back in, there are some key levels that we need to see price break first, right? The first one is already very, very close to that, which is where the previous low is, plus the trend line over here. Okay. Now, obviously, we won't expect or assume that it's going to break. It's just more of like, this is the key level. We want to keep an observation on how price is going to react off it. Now, even if it's going to break, it's probably not just going to break through like that unless there's a major news that's going to happen and push price through. This looks a little bit more of a crawl, so there is the possibility this will pull back first. If this pullback is corrective, then this impulse leg here might be the one that break the entire structure, right? And of course, if you're familiar with some chart patterns, this will then also open up a head and shoulder pattern. Okay, so that's the take on the pound Canadian side of things. Short term, you might even get that possibility of a buy here, right? And then after that, maybe if you see a setup here on the sell side, can then also capitalize on it. All right, so that's on pound Canadian. Then Irene here is asking for the Nasdaq, right? So let me just open up. Okay, Nasdaq. Right. So Nasdaq over here is pretty similar to the S&P in general. In fact, I always say S&P, Nasdaq, or even the Dow Jones. Most of the time, the directional aspect of it is going to be more or less the same, right? So you can see here Nasdaq is basically an impulsive leg breaking that. Just now we can't talk about S&P. Pretty straightforward as well, right? We have that breaking of that high. So same thing here. I'm going to be expecting the equities market overall to be bullish. Okay, so I would say any sort of a pullback, okay, in Nasdaq or even S&P, will likely look for more upside. Okay, but right now it's a little bit too early to pull in our FIPS, right? Because the market is still kind of pushing up, right? Until the market gives us some sign of a top and it starts to pull back, we can then bring in our FIPS to give us some level or area of expectation in terms of like where the pullback is going to go towards, right? But because right now price is still very, very near to the top, it doesn't make sense to put in a FIP here first, because if this keeps moving higher, you need to keep doing its adjustment, right? So usually what I do is I just wait for price to give us some sort of a top-ish side of things where it starts to show signs of, okay, it's pulling back. Then I can say, okay, this is a high, this is a low, then we can start to do that measurement, right? So I think S&P and Nasdaq in general, they are very, very similar. The overall bias is still very, very bullish. Just wait for a pullback and then look for opportunities to get involved in again. Okay. Another one I see here from Kevin is ERT. ERT. Oh, okay, it's a stock, right? On the Nasdaq. Probably never looked at this before. Let me just do a very, very quick scan. Okay. So fundamentally, I have no idea what this company does because I've never really looked into that before. But I will talk about it from a technical chart perspective, right? So obviously on the daily scale, we have this area of consolidation. The market is currently in that zone. I think even on the daily here, we are starting to see some sort of a diagonalish structure, right? Of course, if you take in the momentum indicator, you can see the divergence is there, right? Just based on price action, you can already observe that. So obviously, you don't want to be selling into this area, right? Instead, you want to see if you can get a reversal sign, and then maybe you expect this to push up. Okay. So this is where, as a stock, if the fundamentals of this is bullish, this is definitely an area that you can look to go in. But fundamentally, if this stock is not strong, right? So from fundamental point of view, it can give you some directional bias and focus. If the stock is not strong, you can look to buy it short term. Then maybe when it comes into some of these key areas here, you might then exit your buy. Maybe this is just a technical rebound, and then you look to sell it, right? So the fundamental of a stock can actually comes in to provide you that sort of insight. But just purely from technical, I would say this is the area where you probably don't want to be selling into it aggressively anymore, but instead, as I mentioned, look for that reversal to the upside. Okay, and then of course, just some key levels to take note: lows and highs. So this area would be some sort of a minimum expectation where price would potentially rebound towards. Okay. Yeah, so I hope that helps. All good? Cool. So, yep, I hope today's session give you guys some insights into the markets. What are the things to look out for as well. So all the best. And as usual, I'll keep you guys updated on the daily report itself, okay? So, good night. all the best, and we'll see you guys in the next live session. Okay, you guys.